Welcome to Global and Media Stocks to Watch. I'm Michael Swido. I'm speaking today with John Feneck. He's a commodities analyst and the head of the Feneck Consulting Group. John, great to see you again. Welcome back.
Thanks, Michael. Good to see you.
Precious metals are on a roll. The price of gold is up some 25% since the beginning of the year, and it's been trading at record levels. As of today's filming, it's trading up above $2,600 an ounce. John, I'm wondering, at these levels, is now a good time to invest in gold miners? Tell us, what's in your portfolio?
Sure. So you and I have very different time zones. I think it's under 2,600 now, to be fair. The gold miners, however, have a lot of catching up to do. When you look at GDX, which is the largest ETF in the gold miner producer space, it has over $15 billion US in it, right? That is touching 40 as we speak. 40 is sort of a big round number to get through. We got through there yesterday on Fed Day. We pulled back at the close. We're now rallying close to that number again. So it's flirting with breaking out above 40, which is really great. GDXJ actually touched 50 yesterday for the first time in 2.5 years. And that is the small to mid cap ETF in gold names. So when you see these kind of things happening, you can do one of two things. You can buy these core holdings as we have. We bought them much of our position in 2022 and 2020 when things were much cheaper, or you can buy individual names in the gold space, because what's going to happen, Michael, is a fear of missing out trade, I think, in the gold stocks. It's not happening as we speak. People are taking their time with their entry points. But with gold at this elevated price, it's not going to be, the opportunity for entry points on gold stocks will just not be there by this time next year. So you have to decide this fall probably, how are you going to position into gold stocks now to get a much better, return over the course of the next 12 plus months.
So some of the biggest gold mining companies, they've been doing pretty well. Last I checked, shares of Agnico Eagle were up 65% over the past year. The Newmont Corporation is up about 30%. The same is not necessarily true, though, for a number of the smaller mining and mining exploration companies. We've talked about this before. And you've been in the business for quite a while now. I'm wondering, have you seen a disconnect this large before between gold prices and gold equities?
Never. There really isn't anything you can point to in history this large of a disparity between the gold price and gold equities. And that's what I was just saying in terms of like 2020. Let's take a look at 4 years ago, right? When we're coming out of the pandemic, gold stocks really took off in April, May, June, and they just, they started to subside in the end of August of 2020. So when you look at that, it's been 4+ years that we've really had a rally in gold stocks. Yet gold has gone off the rails, right? Like to your point, up 25% year to date, great year last year. I don't get it, but I'm very happy as a value manager that I can sit here and buy this stuff so cheaply. And I'm patient. So, most investors are not patient, and that's what makes a good value investor. You have to zig when the market zags and take contrarian bets, and that's just part of the game, right? So, to your point, the smaller stuff hasn't really moved yet. Agnico AEM has had a great run. We have a 1.4% position in Agnico. It's one of our largest big cap holdings. We have a 5.9% position in GDX. We have a 5.7% position in GDXJ. So, we do have right there about 14% of our portfolio in large cap producing gold names. Totally, though, we have 41% as of August 31st in gold stocks. A lot of those are smaller names that no one's ever heard of before. You and I have talked about Golden Cariboo before, GCC in Canada, GCCFF in the States. They just came out 10 days ago with great drill results. And that's what you buy the small stuff for, is the opportunity to have a discovery. And, Frank Callahan came out of retirement for this deposit, right? Like a guy with 25+ years of experience doing that should, number one, catch an investor's attention. Why would he do that, right? He's going back to the same jurisdiction that he had success in before. I think that's also important. When you look at stocks, why reinvent the wheel? Why go from Canada, where you're comfortable, to Zimbabwe and start all over again, right? Like that's really important. And they've put out, I think, 16 or 17 holes already year to date. That's pretty outstanding for a small company. And stock's trading like it's going out of business at 14.5 cents. So we continue to buy that one. First Nordic Metals, FNM in Canada, FNMCF in the States, 25 cents US right now. We started buying it at 16. It's, still got a lot of upside. It did hit resistance probably between 32 and 35 US, and then it pulled back to the 24 level. So now it's just starting to move up again. So we like that chart pattern as well, Michael. What that means is if you're at 16 and you go to 33, that's a double, right? Now you're consolidating back down to 24 and starting to move 25, 26, right? So you're making what's called a higher low on that chart, and that's a bullish chart pattern.
So you mentioned Golden Caribou, you mentioned First Nordic Metals. We've chatted with both those companies here on Stocks to Watch, and we're all on a panel together, which you can find on Investor TV, which is in YouTube and elsewhere, in which we talked about all the gold patterns, what's happening, what's hot, and both those gentlemen, CEOs from those companies, joined us on that panel. So look out on Investor TV, that's investor-television.com, and you can find a link to the panel there. Now, while it has been a good season for gold, silver is doing even better. It's up about 30% since January. I understand that demand from solar panel manufacturers is reportedly giving silver a boost, as is a weak US dollar. And John, you just referred to higher lows, and I've heard you say that silver is making higher lows before. Explain to us again what that means and just why is it a bullish sign?
Sure. So you want to see on a chart, it's healthy to retrace some of the gain, but it's not healthy to break support. Okay. So no one argues that last year, 26 an ounce on silver was resistance. It was resistance for months. I was on your show, on every show, saying this, even though it was our largest holding, because I always try to give investors the truth and be straightforward, right? So 26 was resistance, but I told investors last year we have a good shot at breaking 30 this year because we had just so many geopolitical factors at play, the US election coming up, the BRICS meeting. There's just so many things that can go wrong, I think, or surprise investors, that I thought this would be a good year for silver. So we kept our large position in silver, which has really paid off this year. To your point, we're up 30% or so year to date on just that position. We think silver is poised to do better. But to answer your question, if you look at a chart of silver year to date, it was holding 22, then holding 23, then it held 24, and that's when we put another position on at 24 even, because it had held 20, 21, 22, 23, and you start to see a pattern, right, of it can't break certain levels, big round numbers. And so then we bought at 24, we bought again at 25.01, and then we just let it run to 32.50 recently, and we haven't sold anything. It had consolidated back down into the 27s, and now it's above 30 again as we record this. So it's a very healthy chart pattern to see, higher lows being made, a breakout to 32.5, consolidation to say 27, 27.50, and now breaking above 30 again. I'll just remind your viewers that 30 on silver is the biggest resistance level in decades in silver. I mean, it failed at 30, I think 7 different times over 11 years. So for it to break twice this year, and break with authority, that's really, really positive. And that's why you have to be buying silver equities right now. And alongside of silver, we own ABRA Silver, ABBRF in the States, ABRA in Canada. I just met with John at Beaver Creek last week. John, in his couple of years of the company, has seen this go from under 100 million ounces of silver to 258 million ounces of silver. We look for big deposits, Michael, because majors look for big deposits, right? They don't want to get involved in joint ventures or takeovers with someone with, 10 million ounces of silver. It's just not worth it for them. So, I like that John comes from a capital markets background. He cashed up when he needed to earlier this year. He took on 2 strategic investors, Kinross, KGC, as well as Central Puerto, which is the biggest utility company in Argentina. So he's partnering with these people for 4% positions. He's not giving away the farm, but he's giving away enough of the company to cash up, right? So he doesn't have to worry about cash all year and into next year, and he can explore. So there's a lot of upside there. And that's just one example in silver that we're looking at right now.
All right, and just again for our viewers, tell us the name of that company and their ticker symbol again.
Sure, it's ABRA Silver. It's ABBRF in the States, ABRA in Canada.
All right, great. So we've covered gold, we've covered silver. I'm wondering, any other commodities that have caught your eye that you think our viewers should know about?
Yeah, so I mean, copper last year was extremely disappointing. We finished the year down 1 or 2% for the commodity, right? Despite everyone saying what a great year it would be, it wasn't a great year. However, we stuck it out, and copper really ran nicely this year, earlier in the year, back to that magic $5 a pound level, and then it faded again. But it held 4 here recently, which is sort of a big round number as well, and now it's moving back up. So we think copper could do better, especially if we get a softer landing in the economy, which is still up for debate. But I think people pay way too much attention to China when copper is discussed. Copper is now not just a China play, in my opinion. It's like there are shortages at the exchanges when you talk to traders. So it's hard to turn on any production, Michael, but especially copper production, because look at where it's produced, right? Peru, Chile, like parts of the world that have been, in political turmoil over the last couple of years, where production hasn't gone up a lot at all. So if you need more copper, you can't just flip a switch and get it, right? You have to go through the process. It takes years to go back into production, even if you were a former producer many times. So, for that reason, we like deposits with copper in them. Denarius Metals, DNRSF, is one that we started to buy recently. I had dinner with the CFO last week for the first time. It's DMET in Canada. And they're going back into production, Michael, not only in one deposit, but two deposits next year. So here's a story where you don't have to wait 5 to 7 years. They're literally going back into production in the next 6 to 12 months in Spain and Colombia. I would argue Spain's a great jurisdiction. I would also argue that Colombia is misunderstood. When you look at Colombia for mining, it's really supportive of mining. Has it had problems in the past? Of course. So has Peru, so has Chile, so has Argentina. But a lot of these countries in South and Central America are starting to turn, and be more supportive of mining, which I hope we see in a trend, forming for U.S., Canada, Mexico, and other parts of the world.
All right. Well, you mentioned Denarius Metals. I had a chance recently to speak with their CEO. That's also up on Stocks to Watch.
Okay.
So people can check that out. Now, John, I understand you're going to be at the Commodities Global Expo 2024 in Fort Lauderdale, Florida. That's next month. What should our attendees expect? Or I should say, what should your attendees expect?
So I've been attending conferences for 30 years, and many times I'm that guy at the booth standing around waiting for people to come up to me. So we have no booths. I'm tired of that process. We have no presentations from companies either, Michael. We're doing something a little bit different. What we're doing is day one is all networking. It's a happy hour and a formal dinner. Day two is going to be one-on-one meetings with the CEOs of these companies. By the way, we're limiting attendance to 35 companies. And we're limiting investors as well because it's the Four Seasons. It's a very expensive hotel. The dates are October 20 through 22, Four Seasons, Fort Lauderdale, Florida. So yeah, day two is going to be very exciting because there's 35 companies that I've helped pick. And we've really done a good job of distributing the list between small, mid, and large size companies. So if an attendee shows up and just wants microcaps, there will be plenty to choose from. If they want larger names, there's plenty to choose from too. And then day three is going to be presentations from industry experts that typically don't get on the road and do presentations. Like I've got Don Durrett, who's my partner on YouTube. Don hasn't presented at a conference in 5+ years. So, I mean, he's going to unveil his investment process for gold and silver stocks. I mean, to me, that's worth the price of admission right there, because it'll be a 45-minute presentation from someone who's written books on gold and silver, been in the space 30 years, right? We have a trader, Steve Miller, who's been trading for 50 years from the Chicago CBOE, and really showing investors here's the technicals on gold, silver, copper, miners, etc. So it's going to be a really great day. And a short conference, right? We start at 6 p.m. on October 20th. We end by the afternoon of the 22nd. And we hope more investors will fill out the registration form. It's going to be in the show notes, but if you go to partners.com. That's the website. Simply just fill out attendee registration or company registration, and we'll get back to you within 48 hours.
Fantastic. We've been speaking with Feneck Consulting Group President John Feneck. And remember, if you'd like to chat with him in person, head to the Commodities Global Expo in Fort Lauderdale next month. John, thank you very much.
Thanks a lot, Michael.
And thank you very much for watching. This is Global One Media Stocks to Watch. I'm Michael Suedo.